Hello traders. So I'm just gonna do a quick video on the S&P 500 and just to make ourselves tactically prepared for whatever the market is going to throw at us in the coming week. And here we have the daily chart. So I'm just gonna break this down. We had a massive fall obviously because of the coronavirus outbreak, and then a massive rebound as well. So the key question is obviously, where is the market heading from here? While I can't give you an answer to that, no one can. I can provide scenarios. So if this particular level breaks, then what should you expect next, and so on. So let's break this down. I think first thing I'm going to do is zoom out a little bit and put a line right here. This was the high back in 2018. This was a then record high. So the market peaked there, fell quite sharply from there, then subsequently went on to take that level out, stayed above it for a while, and then it broke back lower. Once it broke down, look how much further the market fell before recovering again to go back above it. And that level was retested a few times, and we've seen sharp moves around that level since. And here the market finally decided that it wants to stay above it. Back in August 2019, came back down one more time to retest that, well, two more times, and then it just took off from there. Once it took off, obviously we went on and had repeated record highs before the market crashed, hit that level, bounced, and then broke below it, retested it, on this candle here, and then it dropped. Right? Now we are back to that same level again. So from here, it's possible we could see a retracement after a sharp move up in this bear trend. While that's what I'm looking for. The current trend is obviously bullish, and so it's possible we could see the trend obviously continue to go higher. So it's important to watch what the index does here. Now, if it breaks and holds above this level, then that's bullish, and in that case we could see a continuation higher to 3,000 possibly, and potentially more. However, if we see a nice rejection here, then we could look for a nice move to the downside. But before I break this down further, let me just add in a few other things to this chart to identify our key levels more precisely. So first thing I'm going to do is I'm going to draw a box here. This box here, you can see it was the last kind of move down that didn't really work out for the bears, leading to that big move up, right? So this was a key area of consolidation, which finally resulted in the bulls coming out victorious, leading to a move up. So if I move this across and connect the exact lows and highs, so that's the low and this is the high. Within this gray zone is where I would now be expecting price, or the index in this case rather, to turn lower from, if the bears are still out there. So this is the kind of the big area of potential resistance where the index could turn lower from. If it doesn't turn lower from here, then in all likelihood we are heading to a new record high. So it's a massive area of potential resistance. Now let's break this down further. We have the 200-day moving average converging as well in this zone, around 3,000. Ideally, you don't want to see the index go all the way to the 200-day if you're bearish. Ideally, you should turn lower from here. But it's possible it could go up to 3,000 and then drop. Who knows? Obviously, at the moment, it looks like a V-shaped recovery. It's very strong. So just have an open mind that it could actually break through this. Right. So if you're waiting for confirmation to sell this, then I think this is the level that needs to break now. This low here. We'll just put a line there. So 27.46 is the level that we need to see a breakdown below. That should then lead to a nice move down to previous levels of support and resistance, and couple of levels on the downside include 26.34. This level was clearly a resistance level. We rallied away from there back in the start of April. So if this level breaks, let's call this buys bearish below this level. So if this level breaks, then I'm expecting the market to do something like this. So those would be my two targets. I don't know which one it will bounce from. I think because this level has already been tested here, as you can see, I think if the market were to break this level down, this key support at 27.46, if that level were to give way, then it's possible that the subsequent sell-off could go on to break through that old resistance and head down to 25.29. This level was the base of the breakout from this consolidation, so that level remains untested, right? So we broke that level, but price never, or the index never came down to retest it, at least on this daily time frame. So that would be my downside objective. But to be clear, I'm not bearish yet. I will be, however, if and when the index breaks below this most recent low. Okay, so upon the break of that level, I'm going to turn bearish. Now, let me draw a few other things to make the case for the this area why this is such an important level. So we already know from this black level, the 28.78 level, that historically this was a massive level of support and resistance in the past. Now, if I plot my fibs from the high to the low, here we have the 61.8 fib retracement as well. The 61.8 is really important because usually when the market peaks or bottoms, you tend to see a nice bounce, and typically that ends around the 61.8 fib retrace. If the market were to turn lower from here, I wouldn't be expecting a massive sell-off. That's why I'm targeting 25.29. But if the market had turned around from the 38.2 retrace, then in that case I would have expected a significant continuation lower, because a weak bounce usually suggests that what's happened here? If the market had turned lower from the 38.2, that would have represented a weak, a dead cat bounce, right? And in that case, the market should have gone significantly lower. But the fact that it's broken the 38.2 and it's now approaching 61.8, this suggests that obviously the bulls are in control at the moment, and it's a very impressive bounce. So if the market were to turn lower from this shaded grey region, don't expect this March 2020 low to break down. It could well do, but just be a bit open-minded that the market may have found a significant bottom there, and we could see a record high in the months ahead. So that's why I'm only expecting a moderate drop should this level at 27.46 break. Anyway, so you have the 61.8 fib there. You've got the 200-day moving average there. Notice the shape of the moving average, the slope of it rather. Previously it was rising and the market was above it. Now it's kind of flatlining and it's kind of pointing a bit lower, objectively telling us that the trend has turned bearish. The long-term trend has turned bearish. So that's that. I think I've drawn everything that was that I was planning to do. There's one further level that I haven't drawn yet. It's this level right here. I can call that. I think I'd like this round psychological number, the 3,000 level. because that level was the base of the consolidation here that gave way. Notice how price, I keep saying price, notice how the index didn't retest that level before going down. And there's a bit of a gap there as well. So it's possible that we may see one more attempt of that level and then we could head lower. So I can actually now reduce this shaded region to between this black level here and the 3000 figure. What was that level? 28. It was 28.78, wasn't it? 78.5. Okay. So this is precisely where the sellers should step in if they are indeed out there. If we go above this region, then I think it's game over for the sellers. Okay, so the way I would approach this is, obviously if you're being aggressive, you could look for sell setups on the lower time frames around here, around this shaded region. Or if you want to wait for confirmation, then I would say a break below the most recent low at 27.46 is what's needed, because that level, if I put a box here once again, notice how price, God, I say that again, didn't I? Notice how the index tested this level several times before breaking above it, then came back down, retested it here. Just zoom in if you can see properly. Tested this level on at least 3 occasions, and it held above it, leading to the latest rally. Okay, so there's no reason for the market to come back below that level now. If it approaches this level this time or one more time, then I would say expect it to break. So just to mark another level, this level here, just color it in red. This is the low that was hit on Friday. So ideally, if you're bullish, you don't want the market to go below this level again. If it does, then obviously there's a gap that could be filled right there. And then if we go below that, then I think the bulls will get in trouble. So those are a couple of levels to watch on the way down. Now, what about on the way up? Well, I've highlighted the 61.8 being an important level. That level, though, comes in between the significant level that is 28.78.50, which has already been tested, and the 3000 psychological level, where we also have the 200-day average roughly coming into play as well. So I would say the next big level above 28.78 is not the 61.8, it's the 3000. So the market could easily get there, make no mistake about it. But with everything going on at the moment, the coronavirus outbreak, companies are not operating in their usual ways, and people are not spending in economy. It's really difficult to be bullish on the markets, right? So this is really important to watch what happens here. And if the sellers were to come in, this is the area to do it. If they don't do it here, then forget it. The market's gonna go higher. All right, I hope you enjoyed that, and feel free to leave your comments and share the video if you found it useful.